Welcome to Success Academy. I hope you have watched the earlier video. In that video, we have discussed the first answer of the first chapter of Secretarial Practice. Okay, now we will going to discuss the second and third answer in this video. Okay, let us start. What are the different aspects covered by corporate finance and what decision does a finance manager of a corporation have to deal with? Okay, let us see what is corporate finance. Corporate finance refer to generation and usage of fund by a corporation. The success of any business depends upon the different efficient generation and usage of fund. The financial organization and banks play a vital role in corporate financing. Let us see the different aspects covered by a finance. Corporate finance includes various aspects like financial planning, study of capital market, money market and share market. Covers capital formation and foreign capital. Functions of finance manager. The finance manager of any corporation has to make sure that firm has a adequate finance, the firm is using funds from the right source at a minimum cost, the firm invests those funds in an effective manner, also, the firm is generating maximum return for its owners from the funds invested. Okay, let us discuss the third answer in this chapter. Discuss the importance of corporate finance. In any business enterprise, the important functional areas are production, finance, marketing, and personal activities. Out of these financial activities are given the utmost importance. The importance of corporate finance is as follows. In this thing, you can see a smart code written over there 4H 3P B M R. These are the initial letters which is the given point over here. Okay, this will help you to learn your answer fast. Okay, let us discuss the first point. First point is help in decision making. Corporate finance help us to how to make a decision. First, availability of fund is an important factor that influence major business decisions. It is difficult to perform any function of business enterprise without finance because without finance you cannot perform any activities. Impact on profitability is an important factor that influences business decision making. If you get a profit, that is an important factor in business. It will motivate you, okay, while making decision. Out of various alternatives available to the business, the management is required to select the best one that will ensure maximum profitability. If you make a proper decision, your corporation will have a maximum profit you will get in that and best one decision. Business organization will undertake a project only if it is financially viable. Thus, corporate finance plays a very important role in the decision making process. Let us understand financial viable. It means the ability of a project or idea business to generate sufficient income so as to meet the expenses of the business. If you get an idea, it means if you get an idea about any project deal or anything, so if it can generate sufficient amount of income, so it will, if it is covered all the expenses and you will get a profit after that project completion, that is means financial viable. Let us move to second point. Help in raising capital for a project. A business firm needs finance to start a new venture. Obviously, if we need to start a new venture, we need finance. Finance means money, and it is the lifeblood of business. Finance is the lifeblood of business. There are various sources for a business firm to raise funds like issue of shares, debentures, bonds, and taking loans from the bank. If you issue a share or if you a debenture, bonds, even or take loans, it will help in raising your project. Let us see what corporate finance helps in research and development. Corporate finance also helps in research and development. Research and development is important for growth and expansion of business. It is a very important factor which you will need right now in these situations. Okay. Detailed technical work is essential for the execution of project. Funds have to be made available throughout the lengthy process of research and development. This would require continuous financial support. Also, a company may need to improve its old product or develop a new product in order to attract its customer. Yes, a company will need to replace a old product into new, or else it have to make a new product. So customers will attract to it and will buy to it. Okay. In order to do this, company has to conduct survey, market analysis, etc., which again requires a financial support. Let us see the fourth point. Corporate finance also helps in smooth running of the business. A smooth flow of corporate finance ensures that the salary of employees are paid on time, loans are cleared on time, raw materials are purchased as per requirement, sales promotion is carried out smoothly and product can be launched effectively. Promotes expansion and diversification. Modern machines and technique are required for the expansion and diversification of a business. If you want to expand your business, so modern machines and as well as tech, you have to it is your requirement. It is must in business. It should be in your business for expanding and diversification of the business. Okay. Corporate finance ensures that funds are available to purchase modern machines and techniques. Hence, finance becomes mandatory for the expansion and diversification of a company. Next, payment of dividend and interest. Finance is required to pay dividend and to shareholders, interest to creditors, bank, etc. Payment of taxes and fees. A company has to pay various taxes and fees to the government like income tax, goods and service tax that is GST, fees to the registrar of company etc. on various occasions. Finance is needed to pay these taxes and fees. Corporate finance brings coordination between various activities. Corporate finance plays a very significant role in the control and the coordination of various business activity. Let us see the example. If finance department does not provide the adequate finance for the purchase of raw material and to meet other day-to-day financial requirement for a smooth running of a production department, it will affect the production activity. As a result, the sales may suffer, which in turn will adversely affect the income and profits of the business. Thus, efficiency of every department in a business depends upon the effective financial management. Managing risk. A company has to manage various financial risks like loss due to sudden fall in sales, losses due to natural calamity, loss due to strike, etc. In order to manage such risks, a company needs financial help. Replace old asset. The asset of a company like plant and machinery become old and outdated over these years. The company needs to replace them with new assets over a period of time. Finance is required for the purchase of new assets. I hope you have all understand all these two answers which we have discussed in this video. So if you want more details, or if you want more answers of any subject like eco, OC, SP, and BK, if you want a solution of BK, please contact on 9892354586, and the WhatsApp group link which is in the description, and please comment, share, like, as well as keep the bell on to if you get